Let's go to the trading floor in Chicago and talk with Scott Gecas of Walsh Trading. He joins us now. And Scott, I know you're one of our regular contributors that you love to focus on the options markets. And we have a whole new paradigm now because on Friday, all the May options expired. So what do traders do now?
Right. So with the options across the board, you're seeing a little bit more active to the upside calls, just due to everybody being net short at record levels, to the point where even Goldman Sachs came out overnight with a note saying that there's a lot more upside risk when you're talking about the grains just in general than downside risk. So that's why you're seeing a lot of more upside calls being bought rather than being sold. I wanted to be noticed that the other day when I was on, I was talking about the build in the 365 and the corn options for June. You know, that explosive, we had that big contract block go up around 10,000 contracts. That continues to build. You're seeing open interest around 13,000 right now, with a little bit over 2,000 to 3,000 that has already been traded today. Now, it needs to be noted, though, even with those calls being bought, the skew is a little bit more to the downside versus soybeans or wheat. So we're keeping an eye on that flow just to see what's going to happen in the next few days.
Have you seen more people venturing further out and paying for some time value on these options, maybe to go out more toward September or December on these?
With the deferred months back, we're not really seeing too much option flow. That is pretty normal. You're not going to see a big spike in volume with the deferred months. With the option traders, they typically focus within the 35 or 45-day area.
All right. So let's take a look here. We have that corn market showing a little bit of a gain today, but with the weather makeup the way it is, it doesn't appear that they're really factoring in the potential planning delays by a long shot, because we're talking about some really heavy weather moving in.
Yeah, and that has yet to be seen. We're going to see how this weather is really going to affect the planting. Right now, it's not being priced in as a premium aspect just yet, but it's very clear that it's going to be starting to have a much bigger factor with the weather moving forward.
And apparently USDA has an opinion that if they don't have 50% of the corn planted by May 10th, then they start knocking off potential yield off of their estimates. So we'll have to watch that very closely. Not that far away anymore. Scott, we'll come back here in a moment and we'll take a look at our livestock trade at mid-session. We're talking with Scott Gecas, and we'll be right back. Well, we're talking with our regular contributor, Scott Gecas of Walsh Trading in Chicago, and he's right there at the edge of the trading floor. I want to get your thoughts here, Scott, on this livestock trade as it is shaping up as we get closer to the noon hour where you are there. Let's take a look at the live cattle market. It's been trading mainly lower during the course of the day, but not by a lot. It's mixed now. June live cattle down just a nickel at 115. August up a dime at 112.75. In October, splitting the difference, it's unchanged right now. On the feeders, we've had significant pressure here. August down $1.17 at 151.68. September down 60 at 153.25. And then the losses are less if you get out into the fall months. Now, if you look at the lean hog trade, on the lean hogs, well, we have the June down 45 cents at 88.30. We have July down 60 now at 92.85. We talked about the options use on the grain side of things, but now that the cattle and the hog markets have really sold off in the last 3 or 4 trading sessions here, what has that done to the options value here on livestock? I know on the hogs you said they were almost unaffordable before. Has that changed?
With the options in the hog market, the volatility is still elevated. The expected move right now in the June options is a little over $10, which is pretty extreme considering we have those $3 limits in hogs. So on the cattle side, the skew is pretty much flat. We had that 50% retracement since March 22nd. A lot of people are talking about that. You're seeing that option volatility be a little bit elevated, but the skew is flat, meaning that you're going to pay the same amount for upside calls rather than downside puts. For the cattle market in particular, we're eyeing that 115 level. That's going to be our line in the sand, and we're going to see how that market is going to be closing here in a short period of time.
I believe earlier in the broadcast you were talking about was it Goldman Sachs had issued some guidance on the grain markets that there was more risk to the upside than the down. Is that correct?
Yeah, that came out a little bit late last night, early this morning.
So are they giving any guidance on the livestock side or not?
I have not seen any notes out of Goldman this morning regarding the livestock.
All right, what are the traders talking about then? You mill around there on the floor a little bit. What are they talking about when it comes to the potential for Chinese business here in the hogs? Is that something that's still basically going to underpin this futures market?
Yeah, 100%. That's definitely going to be the main focus going forward. We already know that there's the African swine fever has detrimental effects in China. They need it. That's one of the reasons why they already committed to about 26% of all of U.S. pork exports. So, people are definitely looking at those upside calls. So even with the pullback recently, the 100 calls are still being active, still positions are building on that. So that skew is definitely to the upside in the calls. You're going to pay a little bit more for the upside calls rather than downside puts in the hogs.
Good information. Thank you, Scott, for joining us. Scott Gecas of Walsh Trading Incorporated. He's based there in Chicago. Janet, I just wanted to point out, we were talking about the drop in the crude oil trade. It's 30 cents higher now. So.